if we could be anywhere.
Yeah, so basically what was done in the task force and also as first steps was to divide it in 4 different work streams. One work stream focusing more on let's say what are the features for potential double recourse instruments and what is needed, let's say in order to create a product which could help let's say fund SMEs and other asset types and help fund the economy. A second work stream was more seeing what's already exists, so mapping of current initiatives, various structures in different countries. The third one was looking at the investor side. So yeah, you can create nice structures, you can do all kinds of things, but does it work for investors? What would they like to see? Except of course a higher spread. But that was the third work stream, and the fourth one was to see, okay, what kind of structures are possible. Could be you could look more into securitization-like structures or more traditional covered bonds on balance, but you would need law changes, or so that was more the fourth work stream.
The key finding it was that we believe if we wanted to create a product ex ante, i.e. not take an existing product out of a functioning private market and use it for macroprudential regulatory purposes, but rather on a whiteboard create a product that would then be used to steer these financial flows. One of the obvious starting points would be the legislative implementation of this product in various ways and forms. So have a legislation around the product, have it make it usable for certain ratios and things like that. That was the first finding. The second finding was equally important. That's a necessary condition for such a product to work, but it doesn't look to be a sufficient condition for such a product to work. And in the spirit of the Capital Markets Union, one probably need also to look at the micro level, the loan level, insolvency regulations that pertain throughout Europe, and these sort of things, in order to corner a market from both sides, i.e. from the product side and then also from the collateral pool side.
In the general term, as a takeaway of this exercise, we can say our reading is the market is completely ready for innovation. It's completely ready for innovation alongside a good info package on the potential new collateral pool. There is, on one end, and this has been already discussed this morning, even from investors, not only from issuers, the willingness to protect the brand of covered bond. But on the other hand, there is as well open-mindedness to consider double recourse structure for refinances additional collateral pool. Of course, the intuitive one is SME, but not only SME. We discussed and we asked about what about more complex covered pools such as infrastructure lending, such as shipping financing. And basically the outcome has been we are grown-up guys, we know what we're doing, many of them coming from securitization background, so there is no problem till, but what you need to give us is the correct info package, and the info package could even change a little bit alongside the nature of the collateral.
I think one point on the demand side is sort of when EBRD looks at SMEs, there's a big variation on what the definition of SME is across all our countries of operations. We focus on capital market development. It's not just covered bonds, it's also equity market development, corporate bond, sort of venture capital. And what we're seeing is really the SME community, what different jurisdictions call an SME and what falls into that category is very different. And in a lot of countries of operations, the task really for somebody that's trying to develop local currency capital markets development, is really working with SMEs to, develop corporate governance standards, ownership, structural issues around ownership, and sort of to move away from, a lot of the discussions today around transparency, to move away from a very disclosure-shy mentality. So I think that's just an important point to note on the demand side. I mean, a lot of the conversation today around, the transparency, and it's very interesting for us to be involved in the sort of conversations around what is going to happen with the dual recourse instrument as the sort of, the new and less traditional asset classes are now included in covered pools. I think this will become more and more relevant for our countries of operations.
If we could be anywhere, where would it be? Take what we need and disappear.